the longer it goes, the less likely you are to get paid. So you're essentially financing that. Short-term financing is like the most expensive you're going to find. And yet so many businesses are okay essentially financing their products and services for free, not being compensated for it. And then from there, enforcing late fees, which a lot of people don't do. Communicate that up front. It sounds like a simple thing, but like it's crazy to me how many companies don't do that.
Welcome to Growing Your Business with Buddy Broyles, helping businesses share their voice, build authority, and grow through meaningful conversations. Joining me today on the Growing Your Business podcast is my old and new friend who we have to meet a lot, is Trey Rush, and he is an independent payment systems broker. And Trey, you and I know each other from different circles. I'm actually a customer of yours, really satisfied with how you do things. And the phrase I hear you say to a lot of our friends and other business colleagues is get paid with Trey. Thanks for being on the show.
Man, I'm super stoked to be on again. Thanks for having me.
Yeah, it's great to have you here. Let's talk about what it means to get paid with Trey. Let's talk about your business.
So, I mean, a payment systems broker, like you mentioned before, I usually try to spend a little time explaining the difference, because when you need a payment system, whether you're just starting a business or you're wanting to make a change or whatever, there's different avenues you can go through. You can go through your bank. You can go with the big ones that like Stripe or Square or QuickBooks. There's a lot of them that are just readily available. But there's a lot of business owners out there that just would rather have a contact, someone they know that understands their business. Yes. And how the transactions should flow, how their customer experience should be, and would rather have somebody that knows a little bit more about the industry than they're willing to learn. Yeah. And put together something that's a little bit more custom that can roll right out, that they don't have to put all the pieces together. And that's pretty much what I do.
That's terrific, because in addition to running our business, making sure people, it's not so much about getting paid per se. I mean, yes, we need to get paid, but we want to make it easy. The easy button there is making it so people have an easy way to pay us. So tell me about some of the businesses you help. I could obviously give you a case study of my business, but I'll save that for another time. Let's talk about the types of businesses you can help most.
So to make a blanket statement, yeah. I would say mostly service-based businesses. Yeah. There could be some exceptions to that, but mainly nothing that's just to eliminate a few options would be nothing that's heavily inventory-based. So like your convenience stores, very large restaurants aren't really my forte, but service-based businesses, professional services, trades, yeah. CPAs, attorneys, bookkeepers, plumbers, electricians, that type of thing, service-based. I love dealing with those. And if I had to say what my specialty has been, would be larger B2B companies that have a lot of outstanding, AR or accounts receivable, invoices that they're on 30-day cycles or 45-day, cycles. And I've really enjoyed recently helping businesses clear up their terms and conditions and nail that down so they're not having to wait forever to get paid anymore.
Why is it important to have your terms and conditions clean and crystal clear?
Well, so what I've noticed is that and I didn't really know this until a few years ago. I focused more on the small mom and pop brick and mortar, but as I've started dealing with larger businesses and accounts, I've noticed different problems, right? More money, more problems, as they yes. say. Yep. So in this case, it is when you go the B2B route and when most of your business is on terms and conditions, a lot of people will slow roll payments. And a lot of business owners are just either they're very unorganized, or they're just not, they're kind of leery or hesitant to really enforce their terms and conditions if they're even been communicated. So I've dealt with business owners that just deal with things on a handshake, mm-hmm. and if they are being slow rolled on their payments, a invoice that's due on day 30, it's now day 45, day 50, 60, whatever. There's no enforcement arm. Yeah. There's no clear communication as to what happens now. It's just, I'm hoping this guy pays me.
Yeah.
And the crazy part is, nationwide, if you look at all B2B invoices nationwide, over 50% are past due.
Wow.
So it's just the norm.
Yeah.
That it's just a matter of how late is it going to be. And I forget the exact statistic. I wanted to look it up right before I came in, but it's something like 30% are over 20 days past due, something
Right.
like that.
Something significant.
It's
Significantly past due.
Yeah.
Wow.
It's a very normal thing, and that crushes cash flow.
And there's the other thing that crushes cash flow. And I attended a presentation you gave this morning, Trey, which is excellent, by the way. And what I saw was the fees and other expenses of processing payments just to get paid money that is yours, you're owed for services provided, are crushing businesses. And in your presentation, an example you gave, and you gave several examples, was basically 1 month out of the year of revenue was going straight to, when you average it all out, was going just to pay fees.
Mm-hmm.
So tell me what's been going on in the industries that you're solving. I mean, obviously that's ridiculous. And from my vantage point as a business owner.
Well, all of it. If you can attribute all of it to one word, which is risk.
Oh,
Everything comes down to that, whether it's risk to the processor, risk to the business itself. It all comes down to that. And so what's happening is there's a lot more people that are disputing transactions fraudulently, just fraud in general. So whenever you have that risk increase, naturally corporations are going to price in that risk, right? With any insurance company, you see that. But for whatever reason, on the other side of it, on the small business side, they don't price in that risk. So the processors are doing a good job of that, but the small business owner doesn't. And it's the weirdest scenario that I've seen in business. And most people know these things individually, but when you tie them together and talk about them that way, it's very strange. And I don't really see anybody talking about the fact that businesses are giving so much of their profit to take more risk.
Yeah.
And they don't really see that taking credit cards as a higher risk, but all of them know a situation where they've had a BS dispute or a chargeback.
Yeah.
They have they know that that's a possibility, but they don't associate it with more risk.
Yeah.
And they definitely don't price it in as such. I think that answers the question.
Yes.
I went on a little rant there.
Well, no, but these are problems we face as business owners. We're calculating risk with everything we do, providing a service, taking care of our staff, liabilities that happen. If you have brick and mortar, anything that happens on your roof. So you're constantly calculating risk. What you're doing as an independent payment system broker is, how do we decrease the fees related? I mean, the risks are still there, but finding someone who meets your business as a service provider where you are and help you get better rates.
Mm-hmm.
And there's a service you provide for me as well, is funneling my regular clients into ACH, as in avoid those fees altogether. If they're a good client and we have a regular thing going, they're not going to charge back. They know they're not going to charge back. They love the service I'm providing. Why not? It's a bank transfer. Let's talk about the different ways businesses receive payment and how you corral us into the right way.
Well, to your point, every business is a little bit different.
Yes.
And sometimes I have the luxury of a statement up front where it's very clear, and sometimes not so much. But and then also depending on the business model, do you have the opportunity to put something in place that's reoccurring or recurring, similar but slightly different?
Yes.
That we can employ something like that and get creative, even on businesses that you wouldn't think. But overall, it really comes down to what I use the word is offsetting the risk. Okay,
got it.
So everyone has been conditioned to shop for the rate, right? They're worried about the rate, but at the end of the day, even if you can knock a few basis points off, it's not a huge impact to the business. Now, if you can offset the majority of it, then now we're talking. You know what I mean? Like if I'm saving someone 25 basis points, it might save them 30, 40, 50 bucks a month.
Yeah.
That's not really, in my opinion, worth it for a lot of people to spend a lot of time on. But if I can all but eliminate those costs, or offset it rather, by simply having customers that are paying with card pay for that risk
Yes.
and perks and choice and protection that they're choosing to bring to the table. They're choosing to pay with a card. They're choosing to use a more expensive method where they get all the rewards, and that's fine. I mean, no one's going to sit here and say, don't take credit cards. That would be insane. But what I would say is it's definitely reasonable to ask them to pay for those benefits that they're choosing.
Yes.
And so to your point with ACH, if we can level the playing field by appropriately pricing in that difference for card risk and cost, but then also offer that alternative on the same screen, on that same invoice, so the customer still has a choice. Oh, if you don't want that, that's fine. Most people don't care about 3%. I mean, they just don't. But for the one that does,
Sure.
ACH is an option right here. It's better for the business. It's cheaper. It's safer. Way less chargeback risk. Everybody wins, and choices are always better.
Yeah. But the key ingredient to all of this is getting the terms of service and the communication in front of them. They have to know that I, as a service provider, I'm giving you these choices and different ways to pay me. And then you make the selection. I'm not forcing your hand here. To your point, some people love to rack up the flyer miles on their credit card. Like they're going to choose. They're 3%. Who cares? I'm going to get a whole bunch of frequent flyer miles out of this. You're giving that choice. So let's talk about the importance of the clear communication.
Well, so what I've noticed, and it's kind of related, that I've noticed, I guess, that I underestimated, is just how many businesses don't understand, or business owners don't understand, the capability of just simply keeping a card on file. Whether you're a chiropractor or any type of business where you have a reoccurring business, where the customers in today's day and age are becoming very much accustomed to just keeping their card information on file. Just bill me. Just send me an invoice. Bill me for this. That's fine. Whether that's B2B, which happens a lot now, or just other, like I said, your chiropractor, your cryo facility, whatever. It's actually a luxury, or a convenience, I should say, is a better word, where you're not expecting the customer just to bring in their card every time and pay you. You know what I mean? We have it on file. We'll bill you. We'll send you a receipt and invoice. It's more personable. They feel like they're being treated better.
Right.
You know what I mean? Like it's a better user experience. And the only way you can do that is if you have clear terms and conditions.
Yes.
And what I'm encouraging a lot of businesses, what I run in some resistance sometimes where, anytime you make a change, that they're assuming maybe customers are not comfortable with that or wouldn't want that. But in reality, most of them desperately want that. I don't know about you, but I don't know if I have a single bill that's not on auto pay.
Yeah.
I mean, maybe one or two credit cards, but even there, the minimum's still on auto pay. Yeah. But if I want to go and pay more, I do that minimum. Everything else is on auto pay. Yeah. Like, I don't want to deal with that. So again, it just improves the user experience. And, whether that's in your contract, whether that's in your, your engagement letter, depending on, what kind of business you're doing, having those terms and conditions laid out saying, hey, by doing business with me, you're agreeing we're going to put some method of payment on file. If you want me to still send you an invoice and pay it on your schedule, that's fine. But 3 days after that's due, as part of doing business, you agree, I need to get paid on time. So if you don't pay me, whatever happens, I'm going to go in and pay that bill for you.
Yeah.
And so again, it just avoids, so much hassle from both parties.
Yep.
You're not chasing them down. Nobody wants to chase people down for money.
Yep.
You know what I mean? And a lot of customers are just genuinely busy and forget. It may not be super respectful, but it happens. Yes. And so when both parties agree, there's just less tension.
Yep. And I found that the customers that I've set up for reoccurring, that I've been able to set that up, it just happens. They've agreed that it just bills their card. Now we don't have those awkward conversations every month or whenever that happens. And most of the people, and I'm B2B, right? So business to business, they don't want that email. Two, they want to run their business. Last thing you want to do is like, oh, I need to process a manual bill I was mailed, or a separate invoice, right? So it's a convenience. And myself as a business owner, I'm tracking my expenses. I do my monthly reports and all those types of things. But if I had to process like touch on my keyboard every one of these bills that I'm doing the reoccurring monthlies with the subscriptions I have as a media business, that'd be exhausting.
Well, just the time. I
Yeah.
mean, if you really add up, from, and I don't remember the name of the principle, but basically, if you divide out what you make in a year as a business and how many hours you spend, whatever that number is, they say you shouldn't be doing any task that's less than that number, right?
Right.
So somebody that's making $100 an hour would never answer their own phones, right?
Right.
That's something you could outsource or
Yep.
whatever, you know what I
Yeah.
mean? And so it goes to
It's
that.
diminishing returns for sure.
Yeah, it's just one of those little tasks that you would have to remember, but also your time is valuable.
Yep. And takes away from your capability of running your business. That's excellent. Let's talk about the future of the system you're in, the industry you're in. It's changing, right? What are you seeing on the horizon? What are you dealing with right now that helps you stay in front of your industry?
So there's been a lot of move towards integration. Okay. A lot of people are wanting integrated payments, and like with any industry, there's the overhyped, part of that where, you have some people in my industry that are like, if you don't have a specific software for a specific industry, you're going to go out of business. But yet I go through some towns and they've been using the same terminal for the last like 10 years. You know what I mean? And they're perfectly happy just processing like that. So are there changes with AI and things like that? Absolutely. But I think that, just having somebody that knows what they're doing with payments is still going to be a very valuable resource for a lot of businesses. I say sometimes that I can act as like almost like a fractional payments officer for some businesses, just because I do get a back end look at a lot of their invoicing and how the processes work, and can lend a lot of support or just advice on what I would see from an outside perspective, and that's maybe related to payments but not exactly in the business, if that's if that kind of makes sense.
Yeah, well, you have to. You can't just look at one thing, and that's what I like in your intake. When you and I first met and talked about what you could do for my business, it was a longer conversation about the business as a whole, right? Because even though receiving and invoicing, all that stuff, that's part of the business. But let's look at the whole business need. And I think that's what sets you apart, Trey, is understanding the whole business and the person running the business first. Because obviously you want to get paid, but you want to make sure that as a independent payment system broker, you're looking at the whole business, its past, its future, and bringing all these tools to bear for us.
I actually have a pretty good example of that. A recent client that was brought to me by an acquaintance of ours. When I started onboarding a lot of their invoices, I normally wouldn't look this deep, but I started to see the same kind of names pop up. And when I dug a little deeper, I noticed that their customers had 2 and 3 months worth of past due invoices, and invoices were still being generated, which means they were still getting deliveries. So there was a pattern, and I was like, wait a minute. Okay, guys, so they have so many past due invoices, but yet we're still selling the product. So then I brought it to their attention. I'm like, what's going on with this? And they're like, well, that I guess there was a miscommunication there, or I don't know, but
Right.
that's
Something's wrong.
That's where we landed, and that cascaded into another a bunch of other conversations like what we were talking about before, and where we found out that they had hundreds of thousands of dollars in past due invoices that just weren't being processed. And so, and it hasn't all been implemented yet, but we've had meetings going back to terms and conditions. So I had to get them in a different mentality almost, to realize that by offering terms like with B2B, like if you agree that I'm going to deliver something to you today and you don't have to pay me for 30 days, how much trust that involves and how much risk, going back to that word risk, that is risk. Every day that goes by that you haven't been paid, even if it's inside of the term, increases the risk that you don't get paid. I mean, they could get hit by a bus. Who knows what could happen in that 30 days?
Their industry could be turned upside down.
You never know.
Tornado.
Right. So the longer it goes, the less likely you are to get paid. So you're essentially financing that. And short-term financing is like the most expensive you're going to find. And yet so many businesses are okay essentially financing their products and services for free, not being compensated for it. So in this particular example, I'm like, guys, we got to start charging, either a monthly or or per invoice if somebody's taking product on terms. Okay, because they're not pricing in that risk again.
Yeah, you're just loaning them.
You're just loaning them money.
Yeah.
And then on back end, a lot of times they have to take out loans in order to make payroll or supply orders because they're financing it for free over here. You know what I mean? And so, and then from there, enforcing late fees, which a lot of people don't do, communicate that up front. It sounds like a simple thing, but like it's crazy to me how many companies don't do that. And I think it's like by having a late fee, I think invoices get paid 2 to 3 times faster or 2 to 3 weeks faster. Something like the last time that I looked, it makes a big difference. So a few examples there.
Yeah. And I'm thinking it was the person that stood up in the back of the room that gave a testimonial about how much money you had saved them this year. Yeah. So, and that was not a small amount of money, everybody. So that's good to know that that's possible. Trey, I know in a presentation you gave in front of a large group, I heard you say something about the 3% myth principle. Tell me what that is.
So it's a framework that I've come up with to, I guess, make sense of the idea that if I had to put it at its basic core, it would be that it is just the cost of doing business. Like, I think that is one of the most expensive sentences in business, and not even necessarily with just this, but especially with this. It's crazy to me, and I've really dug very deeply into this into the last year. And nothing that I'm about to say is really revolutionary or a trade secret or anything, but when you tie the dots together and you look at it and you zoom out, it's kind of crazy, really. When, like, for, at least for me and most people that I speak with, I get their reaction. Like, when you do the math, right, you think it's just 3%, and that's like, it's one of the most overlooked like aspects of business is payments, right? Everyone needs to get paid. That's important. But it's like, I've got my payment system in place. It's good. It works, and then they don't deal with it after that. It's just, it's just 3%.
It's just the cost of doing business.
Just the cost of doing business.
Right.
The problem is that we're talking revenue, not profit margin. When you back it out and you find the profit margin, it's often 10, 20%. The lower your profit margins are, the more this affects you. Okay. So, so then the bigger you get, usually bigger business gets, the smaller the profit margin. And so it's mind-boggling to me that businesses are taking all this risk that we talked about, the dispute risk. So when a customer disputes a transaction for pretty much any reason, statistically speaking, only about 18 cents out of every dollar is ever recovered by the business.
Wow.
Okay, so it's very low. So with a disputed transaction, way more often than not, the business is going to lose. The cardholder is going to get their money back.
Yeah.
That's the risk. That's the risk that's taken when you accept cards. That's part of it, right? But that's where pricing in that difference comes in that we talked about before. But what's expected now by just the cost of doing business is that the business is expected to take on all this additional risk and pay for it.
Yeah.
Can you give me another scenario where they're like, well, we're gonna expose your business to all this risk, and then for the privilege of taking on that risk, you're gonna pay a lot more for that.
Right.
That doesn't happen anywhere.
Yeah. Doesn't make any sense at all.
If I sell my truck and buy a Corvette, my insurance premiums are gonna go up.
Right.
They're like, because there's just, with their algorithms and factors, are like, it's just way more likely that it's gonna be expensive for them.
Yes.
So that risk is taken into account. So that's really the main thing, the 3% myth principle. There's more to it than that, but that's the core philosophy, is that it's just wild that businesses are okay, not really okay because they're not thinking about it, they're not doing the math, but the norm, I guess you would say, is giving up 10, 20% of their profit to take on more risk. Like, that's crazy to me.
That's crazy. It is crazy. Crazy to anybody that can think that through.
And For me, I'm a big proponent of offsetting the cost of taking cards, but and a lot of people are doing that now. It's definitely mainstream. Like, it is not by any means controversial at this point. But the reason why most people do decide to offset those fees is just they're looking at it from just a base cost perspective, just the money. For me, I'm looking at it the other way. Even if it didn't save them a nickel up front, but it offset that risk, that alone would be worth offsetting those fees. You know what I mean? The fact that they're saving the revenue on top of it is, I guess, kind of a bonus, but I tie them in together because when you're offsetting those card fees, when those disputes do happen, you have that built-in cushion later on because you've been offsetting this cost. You're still in the black if you've been doing that. You know what I mean? So it's an offset. That's why I say I don't eliminate.
Yeah.
I offset. So I try to be very accurate with how I communicate that.
So everybody listening and watching, if you want to reach Trey, the links he's given to how he likes to be reached are in the show notes. So scroll down, find that information, and reach out to Trey. And on that, Trey, I want to know when they reach out to you, they're going to probably get a Zoom call or some type of online portal where you have a great conversation. Let's talk about how can they prepare themselves for that conversation? What do they need to bring to the conversation?
So I've tried to make that very, very easy, and I've created a tool. I've renamed it a few times. There's been a few iterations, but basically it comes down to a self-audit, essentially. It's a self-auditing tool.
Yeah.
So because I want to make sure that when I get on a call with somebody, it's not so much a question on if it makes sense, to further the conversation, because their time is valuable and so is mine. It's more about what options do we have and how we can help.
Yep.
And so I put together, it's 12 to 15 questions, depending. They're yes or no questions. It takes 3 minutes to get through. But it asks a lot of questions to uncover holes, like how long does it take you to get paid? Does it take you 3 days, 4 days? Is it next day? Just as an example, like, do you have ACH capabilities? Are you passing on the fees? Like, it will give me a better picture on where they're at, and by doing that they'll also have an idea on maybe some areas that can be improved before we even get on a call. And then from there, step 2 is they just plug in some numbers, what their monthly sales volume is, roughly what their fees are, and it'll give them a pretty accurate proposal on what kind of monthly, yearly, and 3-year savings estimate before we even get on a call.
Great.
So, or they don't have to it's something that they can do just to have an idea for their own business. They don't even have to get on a call with me after that if they don't want to. But a lot of times people are prompted to.
Yeah, at least do a conversation.
Yeah.
Because it's eye-opening when you do that exercise.
And here's the thing. One of the biggest things is, for me, is that being a broker, I turn away about as much business as I take in because I want to make sure it's the right fit. Like, I want to come at this as a place from a place of service, and sometimes the best solution may not be my solution, depending on the industry or other factors. And so, if I come in it from that perspective, I know I'm going to win in the long run.
Yeah.
And when it is the best solution, I can confidently say this is the best solution, and here's why. Or it's not, and maybe you look here.
Yeah. What is the thing that you enjoy the most about what you do, Trey?
I enjoy solving problems or just lending insight, I guess you would say. Like, these discovery calls are my favorite part of what I do because, it's somewhat of a specialty, I would think. And when I have a very particular set of skills,
yes.
I mean, that can be useful to somebody, it's fulfilling.
Yeah.
So, and sometimes those awesome calls are ones where it doesn't make sense to be a client afterwards.
Yep.
So
awesome.
But I put them in a better position, and that's what matters.
Yep. And that's a great motivator, is to help people. Well, Trey, I appreciate you coming on the show, talking about what it means to be an independent payment system broker. It's you are a friend, not an enemy. You're there to help them solve a pretty significant problem in all our business. It's good for you, and it's good for your customers too, to make it plain and easy to get paid with Trey. So thanks for being on the show today, Trey.
Appreciate it.